Hello guys, welcome back to another Lumley trading video. In this one we're going to be doing our day trading recap for September 17th. So to get straight into it, in the Discord we posted 30 minutes before the market open, leaning short bias today. We have some downside range to fill on both SPY and QQQ, so the S&P and the Nasdaq, with both a lot of downside gaps again on the Nasdaq and the SPY or the S&P. So we have gaps and we have ranges to the downside. Both of these indicate that they're most likely going to get filled the day they're created. So chances are we'll come down and fill those. So that's where we get our bias from. But again, do note we did have news today. We had retail sales. News will always be the main driver of the day. So we trade based on the normal setup, but we have to use the news over under levels to give us added confirmation. What this means is you're never going to go full size until we're over these over under levels. And again, we went through this, we posted all the pictures from both SPY and QQQ. So again, if we quickly pull up the SPY ones, again, we've given you the range, we've given you the over under levels, and we've given you the gaps. There you go. And then we go over to the Qs, we've given you the over under levels, we've given you the range, we've given you the gaps. All of these expect to come down and get hit. And then 15 minutes into the open, we said early entry, looking at the puts, and we gave you the average entry that we bought. So if we go across, we'll start showing you what we were looking at. So first one, the main first play was the Qs. Again, we provided this range down here. We provided these white lines. These are over under. So if you're above them, you tend to be more bullish. If you're below them, you tend to be more bearish. Again, what is our bias for the day? We're overall quite bearish. So we're not paying too much attention to this upside level. We're paying a lot more attention to the break. So how do we use these levels? You break up, you fill the top side, you come down, you test the second size. Here you break down. So again, you kind of short that first break down. And that's where we got our average. And then you come down again. We didn't quite fill the range now, but again, we're taking profits into that move because again, basically nearly completely filled, but you always take some profits at the top of the range and then look to take it as you're kind of coming into the bottom. So great trade opportunity provided over a 100% move. So that's first trade of the day done. Price then moves away. We come back again, testing that over under level. We keep kind of pulling into that range. You get a snap above. You're coming into extended fib territory. Again, we posted these here. Yep, fibs to look for entry. So again, you got the fibs up here. These are going to be nice short bias entries. Again, Qs and SPYs both basically played the same thing. We'll go through both of them though. Coming into here, again, they can give you kind of an early entry. Again, you're above the over under level. So at that point, you are taking on added risk to get short there. But again, you're going to get a much better entry if you do get short there. Because again, we still expect price to come down and finish that range, which we finally got. And it filled that range coming into about 12.20. And again, at the same time, what's happening? What would have gave you a nice entry today? You had a gap from the 26th of August get filled. That was your short for the day to come down. You fill these gaps, you nearly fill the whole range. So again, this is why we look at both the futures and the ETF, because the ETFs will give you some levels and will also give you the range, and the futures will give you the gaps, because gaps are a lot more important on the futures. And again, kind of just help you align. And again, the VWAPs are normally different between the two, because again, the futures have more volume in extended hours. So again, it's just you use them together, you get a lot more efficiency on these trades. But again, that's basically then QQQ's done. Once that range is filled, we're not too fussed on it as of right then. So again, we can kind of ignore that chart from there. And then the next thing we look at is the SPY and the ES. So again, the same trade plan on here. You can see we got the initial move down, and again, we hadn't even touched the top of the range. So once QQQs had kind of filled most of it and then moved away, we've made money on the Qs. We hadn't entered SPYs yet. So then our main focus will go to SPY, because we have now a lot more reason for SPY to continue down. And again, NASDAQ and ES don't always trade at the exact same. So when they are trading at a difference, you want to be in the better option. So Qs made more sense because we were close to filling that range. And on the second go, SPY makes more sense to come down because we have more reason for it to continue down. Then again, like we said in the Discord, looking at fibs for entry, and again, this was actually on SPY. We gave you these. These will be your entry to look to fill this gap or this range. Price comes up. You've basically caught the exact top. That was a nice move. Then you've also got the break higher at a divergent or MACD, RSI. So again, lots of reasons to get in and definitely confirmation. And what you could have done is it did the spike down. You get this bounce here. That could have been your entry too, because then you're getting the retest on the RSI. And if you wanted to be even more patient, you get the retest of the MACD 0 line around here. So again, either way, you could have been getting short at these fib extensions, or you get short here. From the overall move, it's not going to make a massive difference to your average, again, because you're still targeting a massive move down. So that's all fine. Does the move, you break down. There you go, trade complete. And how can you normally get a nice short entry? We always talk about the golden pockets, the golden range. Can give you that extra short down if you want to trade it again. But overall, that is always going to be the main trade plan, is trade the range fill, and if our gaps on the futures align, that's going to make the trade even cleaner, which again, we had a lot of downside gaps. They're all now filled as of right now, so we can kind of ignore that. And again, that's why we're now done for the day. Everything we wanted to play out worked out perfectly, and again, the options just made hundreds of percents today. And again, if you want to look at the option charts just for an example, again, we were looking short in this range here. So again, you can look at the time. That's going to be around 10:12. You can see, we did take some here. We literally bought the exact bottom though, $26. And what did those options do? We scalped some out. Again, we do have other accounts as well. They would have gone up nearly 1,000%. So again, buying in around 25, they went up 860% on that move. Again, the main place where you'd be looking to actually take the profits, like we did on the other accounts anyway, is when that range fills. So when's that going to be? That's when this candle is roughly complete. So again, we're looking more for a 300% move. And again, that's how we manage risk, because we let these options expire worthless. So as long as you're getting at least a 1-to-1 risk to reward, then it's a viable trade. If you're not getting that, we don't trade it. Anyway, that was the trading recap for today. Hope you enjoy. Hope to see you next one. And that's it. Peace.